Hey, everybody. Welcome to another episode of the Fort Wayne Local Podcast. I'm your host, Jake McAfee. Before we get started, I just want to encourage everyone, if you've liked these podcasts, please share with a friend. You can follow us on YouTube for the video version. That's McAfee Media. Also on Spotify, iTunes, Apple Podcasts. You just search for Fort Wayne Local Podcast. Please subscribe. I've really enjoyed all the positive feedback. And that positive feedback actually led to our guest today coming back. Today, we're going to be talking again with the member of City Council, Jason Arp. Jason, thanks for joining us today.
Hey, thanks for having me on.
Yeah. So last time we spoke, we were more focused on electric works, kind of economic development, a little bit of your background. We're not going to go into in depth on that. If you want to check out episode 9, but I think both your perspective and again, the feedback was why I wanted to have you back on, because I think it's really important to have different points of view. And I know you're generally have a libertarian stance. You're very fiscally conservative. I think that's fair to say. And, you want to make sure that if we're spending tax dollars that have been pooled from people, it's prudent and not just getting kind of caught up in the moment and not getting caught up in the excitement and saying, hey, let's run the numbers on this and make sure that everything's fiscally sound. Is that fair?
Absolutely.
Yep. Okay. And then also in your last interview, you mentioned that when you make a decision like this, whether you're going to support a project or not, you have 3, credentials that you try to look at, or 3 criteria. The first is moral. Is it right to use in this case, public money for private investment? You know what I mean? Basically benefiting a private entity with public money. And sometimes you found moral conflict with that. And then you also make fiduciary decisions, making sure that it's just wise investment for the money. And then your third is public policy, just making sure that it's good public policy. Is that a correct kind of a generalization of how you make decisions for the city?
Yeah. That's right. So these are pretty large microscopes, I guess, or prisms to look through these things. And if something's immoral to do, it's not right for me to take your money for us to do it. And if we're choosing winners or losers, a lot of times that's with economic development stuff. If it's not done properly, you're benefiting a very small group at the expense of all the people that are forced to pay for it, that sort of thing.
Sure.
And fiduciary responsibility, I think we went into this in quite some detail last time, is this an investment that I would make if I was paid to manage somebody's money, or if it was my money, or these, prudent man type decisions. So, as a fiduciary, you're not going to invest in something is going to lose money, or, has a greater risk than the reward is worth. So, and from a public policy standpoint, obviously you don't want to do things that are going to be encouraging the demise of your population. But sometimes you just have to do things like clean water, sewers, maintain streets. Those are public policy decisions that have to be made. They come at an expense. But yeah, those are the general lenses that I use.
Okay. Yeah. And I just wanted that framework before we dive in, because you've also said, you've been in support of, the improvements like streets and sewer, but parks, trails, something that kind of benefits the general population as well, versus, like you said, picking a company to partner with instead of letting the market play out for that. So with that kind of as a paradigm, I wanted to talk about City Council just approved an agreement to acquire 6.4 acres of riverfront property for downtown redevelopment. The city is going to spend $4.5 million with the expectation of attracting private investment. The most notable, building there is the Pepsi warehouse. I know Pepsi, they've announced, is going to be relocating by the airport, looking to make, I think, a $19 million investment in a new facility. And then there was going to be some tax incentives for Pepsi there, which I kind of want to touch on. And then the city says this is going to, they're going to fund this acquisition through local income tax rate, which City Council approved. What does that mean, that the local income tax rate is going to fund it?
So the $4.5 million was specifically to fund the purchase of the Pepsi distribution center there. So the end spend, if you will, for that entire block of riverfront development will likely be a lot higher than that. So that's just one. So if you add that 4.5 million to the almost 2 million for the Schaub Metals building, you're over, you're getting close to $7 million already, and that's before we've laid the first brick or turned over the first part of the demolition. So we're gonna have to spend money to do all that. It'll end up being a lot more than that. The tax incentives for Pepsi, if I was Pepsi, I don't blame them at all. I would do exactly what they did. The city wants to buy this property because we have this desire to do riverfront redevelopment, and for them, they're in a building that's nearly 100 years old. I'm sure that there are better places to get access to the highways, the downtown Fort Wayne. So for them, it makes a lot of sense. And so the city, I think, approached them about a year ago and gave them a general idea of what we're doing in the area. And they actually sold us the building for about where the appraisals were coming in for that area, because that's a big chunk of acreage in that area. And when they move to the new facility that they're going to build, they'll get a tax abatement for that, and that just basically means that they'll have reduced taxes. So they'll probably pay close to nothing the first year, 10% of it the next year, 20% the year after that, until they totally phase in to pay what the full tax load is on that. I voted no on this just because, I don't think it should be the role of the city to play monopoly with this. I think these decisions should be made by Jake McAfee and other people out there in the market that are just, buying and selling real estate, helping other people make choices about real estate. And it shouldn't be the role of government to do these sort of things, especially when you look at this one where we are using income tax money to fund it. So that means that there's a mom out there that's not going to be able to buy a pair of shoes for the kids because they pay into this income tax out of their withholding. So that way the city can buy this property, do all the environmental remediation, and then probably likely give it to a developer and probably give them other incentives to build something that they want to see there. And most likely some element of that will end up being a private building that some company or some person will own, and then they'll profit from it while if you don't pay your income taxes, you're in a lot of trouble. So that's certainly a moral dilemma there in and of itself, more brightly than, say, some other project that was TIF funded. We can get into that later if you like.
Sure.
So did I answer all the questions you had about that particular
post? Yeah. No, that makes sense. I guess it was just the way it was phrased kind of threw me off. I think it said funded through local income tax rate. Yeah. I guess meaning that they're not going to increase taxes. Is that what that meant?
No. So that means, back in 2017, the city passed a riverfront lit meaning local income taxes, a designation the state has created. So it's added on to all the other local income taxes that we have. So if you look at your pay stub, if you're a W-2 employee, you have your federal income taxes, your state income taxes, and then there is a portion that is a local income tax, and that rate is about 1.5% for people in Allen County.
Okay.
And a portion of that gets sent to the different taxing entities. So if you're in Fort Wayne, part of that's going to go to the Fort Wayne Community Development Park, and a portion of that was designated by council in 2017 to be the riverfront lit or local income tax. So that money would be dedicated to spending on things that are in this, what they've defined as the riverfront area. So it's basically downtown on both the north and south side. And they did this partially to help fund the Promenade Park, but more so to fund the ongoing development downtown. So I'm sure you're aware of the big apartment complexes that are being built. Uh, one right by the Club Soda, and then the other one beside Promenade Park.
Mm-hmm.
Both of those got a little bit of this lit to help fund those as well. So it may be a bond that's issued that the payments are paid with the lit. It could be like this Pepsi purchase where we use a large portion of the lit to fund the purchase of the property. So that's what that is. And if any of your viewers are interested in looking up any of these ordinances, or if they see something they're curious about, they can go to cityoffortwayne.org. So that's the official city website /ordinance-view.html. And you know what? I'm just going to share this in the chat. Can I do that? I don't know if sharing.
I can link to it when I post this if you'd like.
Okay. And there you go.
I gotcha. Okay.
And then that way, if anyone's curious, they can there's a keyword search for description or dates. And you can look up any ordinance and it'll show you what the vote was. It'll have all the supporting documents for it. It's very helpful, just to keep citizens aware of, if they have questions or something that's going on, they can look it up. And usually within a few weeks of the bill, all that detail will be on there.
Okay. And I kind of want to go back to something you said. You said and play devil's advocate a little bit about, I totally get the stance on, not using public funds to, like you said, play Monopoly and influence that. What would you say, though, if someone was like, well, it's very unlikely that private entities are going to be able to mobilize and put together that much redevelopment along in that area? Like one person might buy this and one person might buy this, but if they all have different agendas, at least here, we have one entity kind of controlling what's happening with the idea of the greater good being, bringing in more businesses, bringing in more revenue, restaurants, hotels, stuff like that. Like, what would you say to that kind of counter?
Well, the thing is when the city does it, the city ends up paying for a lot of it and using people that aren't going to benefit from it, using their money from it. And a lot of the arguments about, well, it's going to grow the tax base. There's no actual empirical data that supports that. So, I mean, it's the Bastiat's seen versus unseen. I don't know if you're familiar with Frederick Bastiat, who's an economist in France in the 1850s. But this concept that when government does something, you see it, and so it looks great. But what you don't see is all the normal activities that everybody in the world would be doing otherwise, and the benefits in their own private lives. So you don't see those things, but you see the shiny building that was built from what was taken from all the other people. So I think there's a little bit of that. As far as if this is something that people want to do, you could at any time you could form a REIT, you could form any kind of real estate development company that you want to, and you could be making these purchases and doing this development on your own as a developer. Developers do that sort of thing all the time in the county. They'll buy farmland and work to get sewer and all the other amenities to the property. They'll build the roads. They'll have the plats divided and all that kind of good stuff. That's the work that the developer does in order to make a profit. Then he sells the lots to builders, and builders sell the homes. So if someone thought that this was something that was highly in demand, it could certainly be done by private forces without the intervention of the government using income tax money. So income tax money is not money that you have a choice whether or not to pay. So that's, I think, a really high bar to say whether something should be paid for with income taxes. I think that there probably is a role in planning for those things. I think having the government be involved in helping to plan might be okay, but as far as using the force of government to either make these purchases, and sometimes you've seen, a few years ago, one of the early riverfront development parcels, we ended up having to use eminent domain. And so that's another thing. At what level does doing, what we think is a nice development meet the threshold required to morally justify taking somebody's property against their will. And that's not the case with either the Pepsi or the Schwab building, but that has happened. So those are all, concerns that you think of with having the city be involved in it.
Okay. And, I was going to kind of wait till the end, but I feel like this is a good time for it. We talked before we got on air about, you've had times where you were maybe against something, but you knew that you, instead of sitting it out and being against it, you said, this is happening with or without me. Even if I vote no, I need to try to at least assert some influence or some prudence on it. How do you balance that, and how did you do that, or how do you plan to do that here, where you voted no, but it's still got approved? Like, what's your personal next step with like supporting this or having some sort of role in this project?
I mean, I do serve on a redevelopment commission, and there are times where people ask my opinion, what will go. I mean, a lot of times they know that they're not going to have my vote, but they'll ask, well, what are things that you would want to see? But there have been times where I have supported projects where maybe it didn't meet necessarily all of my general criteria. An example that we had talked about briefly before we started recording was the Clyde Theater. So when that was going down, I was on the Legacy Investment Committee, and instead of just giving the money to the developer, and this was in the early stages of whether or not Chuck Schurak was going to be involved or not. Instead of just giving that money, could we do that as a loan and have them pay back the loan through the taxes that they would have paid otherwise? So, and have it lent through Legacy, because they weren't sure whether or not it was going to have the revenue generated. So we took the risk using the Legacy fund, which is, basically kind of it's not necessarily taxpayer money. This is, from the sale of the city utility years ago. And the way we structured that, I think it worked out really well. And it's, it's done a lot to redevelop that corner at Bluffton and Broadway.
Can we drill down a little bit on the differences of how that was structured? I mean, I don't want to get like too technical and bogged down, but I just want to make sure I'm hearing you correctly on, like, you saw less risk in that for the city then. Is that correct?
Yeah. So the city was able to get its money back, and we've actually been repaid the majority of the money that we loaned for the creation of the Clyde. So it basically came at no expense.
So instead of investing the money and hoping to recoup it long term, you almost structure it differently as like a loan, as if like a bank would issue, with the expectation of being paid back on a quicker timeline.
And we were able to do that through the Legacy Foundation, because it's not a government entity. Government entities can't loan money. And so by using I was on the Legacy board. So I said, why don't we use this where we can loan it and get it back, and be able to have collateral. I mean, we would be a lender and be, if we needed to take possession, if we didn't get paid back. So it put the city in a better standing as a lender, as opposed to a grantor.
Okay.
So like when we're buying this property, we're speculating that we're going to be able to come up with a use that somebody's going to be willing to pay us at least more than $4.5 million.
Yeah, I see.
And so that's a big speculation, and it also has us, as a city, trying to decide what's the best use for this property. Whereas that really should be left up to individuals and market participants to decide what they think their customers want, as opposed to a government entity making those decisions for them.
Okay. And then what about, kind of in the same vein of what I was talking about, what is there a risk though to leaving it open without restricting or influencing the use? And then, right across Main Street over the river is a storage unit, and no disrespect to them, I mean, those are great investments, but like, what if the area turned into a bunch of storage units? I don't know that that's necessarily what would benefit the area the most. How do you factor that in, like having it, you know what I mean? Like like I would assume that, restaurants, bars, amenities, like things that are like attractions that are going to bring people are going to be better for the surrounding area and for the citizens than like a string of like, I don't know, you know what I mean? Like a pawn shop or a storage unit or something like that. How do you factor that in?
Well, we don't get to say, what each individual business is going to be. For instance, I didn't support the landing redevelopment, but it was done. And to this day, you still have bail bonds and whatnot there. So just because the government spends a lot of money redeveloping something doesn't mean it's going to turn out exactly the way they want it to. But as far as like that area and the uses and everything, it is zoned, and we'll continue to rezone more stuff to be what they call urban core. It would be a mix of housing and kind of retail commercial type stuff. So you're not going to see, a chemical plant or anything like that there. You're not going to see industrial uses. I think storage units are considered an industrial use. So they'll limit the uses to things within that zoning parameter. But urban core, I think, is going to help to have the proper kind of density that you're going to need to support a lot of these types of activities. Because if you made it just residential or just commercial, it's difficult to achieve the kind of planned density. So a lot of developers will like to kind of mix in, apartments and stuff upstairs and retail on the first floor, which is kind of funny because that's the way everything used to be 100 years ago.
Yeah,
coming back. A building that's over 100 years old in Columbia City, and my first floor is all offices and retail, and then upstairs is all apartments, and that's kind of the way things used to be, and it's kind of returning the idea of having big parking lots and stuff. That was a 1950s development, kind of went that way for 50 years, where big building with giant parking lots, and now we're kind of moving away from that.
Speaking of parking, how do you feel? What's your stance on the government making investments in like parking garages? If those maybe aren't economically viable for someone to actually want to do, but a parking garage where, downtown lacks parking, that's no secret. Where do you stand on like a parking garage near Promenade or something like that might spur private development around it?
I think that these things probably should be done by individuals and developers. And I used to live in Chicago, and there was lots of parking garages that were not constructed by the city of Chicago. They were not financed by the city of Chicago. That they were developed by individuals that wanted to make money because they said, "Hey, I can rent out parking spots for X amount." And a lot of times when the city does these things, we end up subsidizing the spaces at too low of a rate for what the market should be demanding and what the costs of the buildings are. And I think we have a tendency to probably overpay for a lot of these parking garages. Anymore, it's well over $50,000 a space. What we're paying to build some of these parking garages. Fort Wayne has developed a monopoly on parking. We own and construct almost all the new parking that's going on downtown. We have lots and lots of parking spaces in development now. In fact, in these new Barrett and Stokely developments, the city of Fort Wayne is actually the primary lessee in these. So we're financing the construction of them, and then we'll turn around and be the leaser of the space. So I don't know. So Promenade is going to end up using a lot of those parking spaces in that Barrett Stokely facility. That's a big part of what that development was. I think that somebody could probably make money doing that if the city wasn't involved in it. It'd look a little different. The spaces would be more expensive to people probably. But basically we're subsidizing one set of things with something else. And so a lot of these are getting funding through income taxes. So your income taxes are going to pay for more affordable parking.
I see. So that seems to be where you kind of draw the line. It's like, if it's income tax, I've got a whole new set of expectations and criteria versus like what you mentioned with the legacy fund. Not that you're not prudent with that, but like you said, with income tax, there's a higher sense of responsibility where this was money that was taken from others. And if it's going to be reinvested, it needs to be something that benefits everyone.
Yeah, and I don't know if like I mean, so like when you make an investment, you have a certain ROI in mind, right? I mean,
Mm-hmm.
like I mean, when you're showing someone a commercial property, you know how many square feet it is, you know how much you can charge per square feet. You have an idea of what the taxes, what the maintenance, what all the operating costs of the building is, and when you're done, you have an idea of what your net rental income is going to be, and then you project those for the future, and you discount it back to present value. You have an idea of how to calculate your return on investment. Um, when the government does these things, we make a lot of guesses about people that are moving here and using the spaces and tax revenue that's going to be generated in other places. But nobody ever goes back to verify any of those things. A lot of these projections are put out there by consultants, and they almost never come to fruition. I know this episode is not about electric works, and I don't necessarily need that to be my whipping post all the time, if you will. But I look at it and I say, there was a lot of great grand proposals and ideas that around this thing about how it's going to attract people from out of town to move here. And you look at it, it's like, okay, if I look at the tenant list, not a single one of them is from outside of Allen County.
Mm-hmm.
And another thing was, well, this is going to bring a whole lot of tax revenue to it. Well, now that it's growing closer to completion, it turns out that not a single dollar of tax revenue is going to be available for Fort Wayne Fire, police, Fort Wayne Community Schools, libraries, or anybody until after 2050, because all the tax revenue is tied up in paying back the bonds. So when you start getting into this and you start thinking about how future dollars, especially future dollars, are that far off, how much are they worth today, especially when you have a rising interest rate environment, higher inflation cost. These things are worth, thank you. My wife just brought me a cup of coffee, which I desperately needed.
Gotta stay wired in. I get it.
So a lot of these economic development promises don't come to fruition, and no one ever goes back and says, hey, these were all the promises that were made. This is the reality of it. The reality of it is, yes, we do have a new building, but it's on top of a already stressed commercial real estate market. As you know, like you and I are doing this video via Zoom.
Mm-hmm.
And anymore, I find myself having lots of meetings via Zoom. And it's not just me, it's all over the country. And there's been lots of articles written about this, about how commercial real estate, particularly office space, is under price pressure. And I know of people that are signing new leases in downtown buildings for $12 per square foot. That's a far sight lower than where we thought the median was for Class A real estate in downtown Fort Wayne when we started the Electric Works project 5 years ago. So I think these things weren't taken into account by council or the other people that were putting that project together. But those are things that are going to apply to any of these things, whether it's Electric Works or any of these projects that are going on downtown, and they will look good. I think the Barrett and Stokely buildings, when they're done, are going to look great. I think it's going to be nice to have the parking there. There's a lot of really nice things about them, but do they make sense financially? I don't know that anybody's done that calculation. And I think it's almost impossible to do that. And that's why that's the purpose of entrepreneurs, to make those choices, because you're making a gamble, and you're gambling with your own money or with people that have entrusted you to make those decisions for them. No, I don't think that people, when they elect their city council or their mayor, are asking them to make these financial gambles on their behalf. I think they're asking them, hey, make sure that we have police and fire and the streets and that sort of thing. And even some of that stuff, there's opportunities for private sector to step into doing more of the things that government does now. I mean, garbage collection is a great example. You know, if you live in the city of Fort Wayne, you know what the last few years have been like. And, you know, I would have liked if we could have gotten away from having a city contract for garbage and just allow neighborhood associations and maybe people form small groups of people that would be buying groups. You know, you may have 100 or 1,000 people in a buying group to contract with somebody, so that way you get some competition. But that's not the way we went. And again, you talk about working with people. This isn't necessarily the same genre of decision, but as president of the council this year, I mean, it was up to me to work with the rest of the council members to get to a contract where we could get all the council members on board with it, and get to where, I mean, I think it's important, especially as bad as garbage service has been, that we have, you know, a fairly united front on that question now. So I don't know, it's kind of a long rambling way off topic.
No, it kind of ties in, because that was going to be one of my last questions was, you know, how you kind of stay true to your libertarian roots, how you do what you feel is best for taxpayers, but knowing, you know, again, we kind of touched on this earlier, but just how you can influence things, but without maybe getting exactly what you want, you know, finding ways to work with different people.
Yeah.
You know, one thing I did want to touch on, we kind of went there a little bit. How are you factoring in, you know, there's a lot of concern about the economy right now. Clearly we're in a market with inflation, interest rates rising. I know they ticked down a little bit, but, you know, there's a lot of concern out there. Are you concerned? And how does that factor into projects like, you know, this Pepsi acquisition and all this redevelopment?
Yeah. So as we were mentioning before, inflation, we haven't seen real inflation in the United States probably in 40 years. When I was trading bonds back at Bank of America, we would see, you know, maybe two, sometimes every once in a while you might get close to 3% or fear of 3% inflation. But I think we're actually seeing inflation that's going to be running, you know, maybe averaging 5% for some period of time. I mean, if you look at what CPI was year over year in March, I think it was 17.5% was the revised number that was just published. That's a pretty high number. I don't think anybody expects it to go on that way for a long time, but I think we have seen an elevation in price level that will probably stay with us. I don't think this is transitory. I think that it's been a permanent up step in prices. Question is whether that continues or not. But I do think that we have to factor in a higher discount rate and when we're trying to decide what the price of something should be. And so we were talking about this earlier. You think about the discount rate would be like, people are familiar with stocks. They hear people on CNBC or whatever talk about PE ratios all the time, price earnings ratios. So sometimes I use that because people are more familiar with that than discount factors or interest rate, you know, discount rates. So if you think about like a 15 times used to be kind of a rule of thumb for a stock, you know, you look at 15 times earnings, it's kind of a rule of thumb. Well, that equates to a 6.66% interest rate, or what we call discount rate. So if you're expecting interest rates to go up or inflation to be higher, then you're going to have a higher required return. And the higher that number is, the lower the value of the investment is, because your payments in the future are worth that much less. The dollar buys that much less stuff in the future. And so when we're making these decisions about how much we should be spending on properties today, we need to be factoring in how much is this going to be worth in the future. I don't think we've done a whole lot of that. And I think, you know, people are going to start changing buying patterns. You know, my wife gets home from the grocery store and says, hey, our bill is twice what it was last year for a week's worth of groceries. Whether or not that's transitory, I don't know. But it does mean that, you know, we're probably going to spend less on other things. And I think a lot of people are coming to have to make those same decisions. The price of gas is factored into almost all consumer goods because they have to be trucked to you from somewhere. And so, you know, people are going to have to start making those types of decisions. In some markets, it may not have as big of a impact as it might others. Like family dining will probably be hit worse than say Ruth Chris, I mean, that kind of stuff.
Mm-hmm.
But yeah, I mean, and I think we have to be cognizant of that when we're talking about spending taxpayer money on things. If families are having to decide between groceries and shoes, should we be taking their money to build parking spaces downtown when they rarely get to enjoy anything downtown? So, yeah, I do think that we have to think about those things, and anything that we can't pay cash for, if we're thinking about borrowing, and the borrowing costs are going to be higher in the future, and all these things that we're building are going to have maintenance costs, so there's going to be some sort of ongoing cost with all of it.
Okay. This was fantastic. I promised you this one would be shorter. So,
and you know what? I want to make an apology. I didn't realize how bad my sinuses were until we started talking. I'm like, man, I sound horrible.
Oh, you're good. No, you're good. Listen, last time I did this thing with old cheap headphones, so I feel like we've come a long way. How can people connect with you or learn more about your platform or your views, or where can people kind of connect with you?
I've got some videos and stuff that I've done a couple of years ago that kind of go through a lot of these things, kind of more step-by-step kind of whiteboard demonstrations at jasonarp.com. You can also find me on Facebook, just Jason Arp, and that's my personal, and my city council site on Facebook is Jason Arp City Council, I think, something like that.
Okay, I'll take a look. I can take a look at that.
And I respond to most emails if you email me at jasonarpcitycouncil.com if it's a city council related thing. If it's not, my personal email is jasonarp99@gmail.com.
Awesome. Well, I appreciate your transparency once again. I've had a lot of admiration for you now that I've gotten to know you a little bit. Clearly your North Star is what's in people's best interest, and I hope that even though you might have a different viewpoint or a different message for most people, to me, it's very clear that what's in people's best interest is what's guiding your decisions. And I think that's awesome. And I know we've talked about, you've taken some heat for it. So, I really appreciate your time today and your point of view.
Hey, it was fun doing this by video, but next time we're going to have to do it where we can, clink a glass of whiskey or something.
I'm in.
Right.
All right, Jason, we'll take care, and until the next time.